Good morning, ladies and gentlemen. Welcome to the 2013 interim results presentation of China Resources Cement Holdings Limited. Let me introduce the management on the stage. They are Mr. Zhou Longshan, Chairman and Executive Director. Mr. Pan Yonghong, Executive Director and Chief Executive Officer. Mr. Yu Zhongliang, Executive Director and Vice Chairman. And Mr. Robert Lau, Executive Director and Chief Financial Officer. The presentation is divided into 5 sections. Section 1 is Corporate Overview. Section 2 is Financial Review. Section 3 is Operational Review, followed by Section 4, Outlook and Prospects. The final section is Q&A. Next, Chairman Mr. Zhou Longshan is going to present the corporate overview for the first half of 2013. Mr. Zhou, please.
Ladies and gentlemen, good morning. Welcome to 2013 interim result presentation of the CR Cement. First of all, let me walk you through the corporate overview. We have achieved enlarging results for first half of 2013. Our turnover rose 16.5% year-on-year to 12.9 billion Hong Kong dollar, while profit attributable to owners of the company increased by 80.4% to 1.15 billion Hong Kong dollar. In first half of 2013, our sales volumes and utilization rates increased significantly. Being the largest NP clinker, cement and concrete producer in southern China, CR Cement achieved growth of 30.2%, 11.6%, and 74% in sales volume for cement, clinker, and concrete for first half of 2013, respectively. We have further enlarged our market share and enhanced our position in our operating regions. We persist in a 3+2 development strategy, which is control of resources, conversion of resources, and distribution of resources, plus lowest total cost and leading in regional market. By improving our cost structure, reinforcing the centralized procurement, and implementing the water shipment and transition shipment model, we will be the lowest total cost cement producer within the region. We have completed technological upgrades on nitrogenation for 11 clinker production lines. The remaining 29 lines will be scheduled for upgrades. We have also completed technological upgrades on dust collection system for 4 clinker production lines, while upgrades for 8 lines are in progress. The nitrogen oxides and dust emission will be effectively reduced. These upgrades will make us in compliance with the new emission standards for the cement industry in China. We are dedicated to environmental protection and sustainable development of the cement industry. We are in a leading position in energy saving, emission reduction, and circular economy with the cement industry in China. As the co-chairman of Cement Sustainability Initiative, China Resources Cement values its interaction with the international cement peers on energy savings, emission reduction, and social responsibility. In July 2013, we participated in the CEO conference held by CSI in Heidelberg, Germany, where we discussed with the other cement peers worldwide regarding the future development of our organization and its strategic path to 2020. In the first half of 2013, China achieved steady economic growth. China's GDP reached 24.8 trillion renminbi, representing a year-on-year increase of 7.6%, excluding rural households. The national FDI amounted to 18.1 trillion renminbi, representing an increase of 20.1%. The GDP growth of Guangdong, Guangxi, Fujian, Hainan, Yunnan, and Shanxi, where we operate, were all above the national level. The FAI growth rates of the provinces where we operate, except Guangdong, were all above the national level. FAI remained key driver of economic growth. Amongst them, infrastructure investment was 2.7 trillion RMB, representing an increase of 25.3%. The CPI for the first half of the year rose by 2.4%, which is below government control target of 3.5%. China's 2013 target of GDP and FAI growth was set at 7.5% and 18%, respectively. At the Central Economic World Conference in July, the central government emphasized its economic policy of steady growth, adjusting the structure, and advancing reforms. To continue with steady monetary policy, the government declared a plan to activate existing quantity and maintain the total money and the credit supply reasonably in the market. At the same time, it has also maintained a proactive fiscal policy by expanding government expenditure and stimulating domestic consumption. In respect of the railway investment, the Chinese government launched the Railway Investment System Reform proposal in May 2013, whereby the certain ownership and operations right of railway will be open to private capitals. In the first half of 2013, investment of 215.9 billion RMB has been completed, representing a year-on-year increase of 21.5%, which was 57.6% points higher than a year. In July, the NDRC approved the China Railway Corporation to issue 150 billion RMB bonds in phrase in 2013. The proceeds will be used for the construction of 73 railway projects. The Chinese government also proposed the other favorable measures for railway construction, such as fully opening the railway construction market, establishing railway development funds, and accelerating the prepared work so that 12-5-year plan will be proceed as scheduled. These measures are expected to provide a favorable environment for railway industry and will drive cement consumption. Academy of Macroeconomic Research, NDRC, has set long-term target length of national railway network at 190,000 kilometers. Currently, 98,000 kilometers have been completed. The FAI in highway and waterway reached 600 billion RMB in first half of the year, representing a year-on-year increase of 9.2%, which was 15.4% points higher than on the year. According to National Highway Network Planning 2013 to 2030, the target length of national operating highway will be increased from 68,000 kilometers at the end of 2012 to 136,000 kilometers by 2030. We believe ongoing construction of highway and waterway infrastructure will facilitate the medium of long-term demand for cement. China's real estate investment reached 3.7 trillion RMB in first half of 2013, representing a year-on-year increase of 20.3%, which was 4.7% point higher than a year. Total area of the real estate completed was approximately 353 million square meters, representing an increase of 6.3%. Total area of the commodity housing sold was 514 million square meters, representing a year-on-year increase of 28.7%. In the meantime, the Chinese government is actively promoting the construction of social housing. During the first half of 2013, the construction of 4.4 million units was commenced and 20.4 million units was completed. We believe that China's steady demand for real estate would support sustainable growth in cement consumption. According to National Bureau of Statistics, the total cement production reached 1.1 billion tons, increasing by 9.7% in the first half of the year. In southern China, where we operate, the total cement output was approximately 200 million tons, representing an increase of 17.1%. The total cement output in Shanxi was approximately 20.2 million tons, representing an increase of 0.6%. In the first half of 2013, 92 new clinker production lines commenced production, adding clinker production capacity of 38.8 million tons in China, which represented a decrease of 53.2%. Among them, only 7 production lines was released in southern China, increasing clinker production capacity by 8.2 million tons, which represented a decrease of 62%. In Shanxi, 3 production lines commenced operation, providing 3.9 million tons of new production capacity, which represented an increase of 20%. A decreasing trend in clinker capacity growth nationwide has become more apparent. At the end of June 2013, total NSP clinker production capacity in China reached 1.7 billion tons, including 285 million tons in southern China and 80 million tons in Shanxi. The MIT issued a target eliminating 92.8 million tons of obsolete cement capacity in 2013, among which about 28 million tons and 3.5 million tons will be eliminated in southern China and Shanxi, respectively. The removal of obsolete capacity will improve supply and demand conditions, as well as the business environment for cement industry in China. Next, our CFO, Mr. Robert Lau, will give you a review of the company's financial performance.
Thank you, Mr. Zhao. For the 6 months ended 30th June 2013, turnover increased by 16.5% to 12.9 billion. EBITDA increased by 36% to 2.7 billion. Profit attributable to owners of the company was up 80.4% to 1.1 billion, and basic earnings per share was 17.6 Hong Kong cents. The board has resolved to declare the payment of an interim dividend of 3.5 Hong Kong cents per share, and the dividend will be payable in cash with an option to receive new and fully paid shares in lieu of cash. These charts shows our sales volume and turnover by products. In the first half of 2013, the sales volume of cement increased by 32.2% year-on-year to 30 million tons, while clinker increased by 11.6% to 4.9 million tons. The sales volume of concrete was 6.9 million cubic meters, up by 17.4% year-on-year. During the period, turnover of cement and clinker was 10.3 billion, accounting for about 80% of the consolidated turnover. Page 12 shows our cement sales by geographical areas. In the first half of 2013, the sales volume of cement in southern China increased by 33% year-on-year to 28.8 million tons, while turnover increased by 19.1% to 8.7 billion. In Shanxi, the sales volume of cement was up 18.9% year-on-year to 1.5 million tons, and the turnover grew by 13.8% to 430 million. In the first half of 2013, the average selling prices of our cement and clinker were 300.3 Hong Kong dollars per ton and 235.2 Hong Kong dollars per ton respectively, representing year-on-year decreases of 10.1% and 13%. The decrease for the period reflected the more competitive market situation as more new capacities have been released into the market since 2012. However, we expect that new production capacities will decrease, and with more obsolete capacity being eliminated in the future, the average selling prices will increase gradually. The price of concrete was 376.5 Hong Kong dollars per cubic meter, which was relatively stable throughout the period. The consolidated gross profit for the period was 3 billion, up 29% year-on-year, and the consolidated gross margin was 23.1%, representing an increase of 2.3 percentage points over the corresponding period last year. The increase in consolidated gross profit for the period was mainly attributable to the increase in sales volume and increase in gross margin. The increase in gross margin was mainly due to the reduction of our cement production costs. The margins for cement, clinker, and concrete for the period were 24.1%, 9.9%, and 25.2% respectively. Selling and distribution expenses for the period were 703 million, up 29.6% year-on-year. As a percentage to turnover, selling and distribution expenses increased to 5.5%. This was mainly due to the effect of lower average selling prices of our cement products and also higher transportation costs as more cement and clinker were delivered from Guangxi to Guangdong for sale. General and administrative expenses for the period were 853 million, representing a year-on-year increase of 11.4%. As a percentage to turnover, general and administrative expenses decreased to 6.6% from 6.9% for the corresponding period last year. SG&A expenses totally accounted for 12.1% of the turnover for the period. The effective tax rate of the company for the period was 17.7%, representing a year-on-year decrease of 2.3 percentage points. This was mainly due to a higher portion of the group's profit generated in Guangxi. Net profit of the company for the period increased to 1.15 billion. Net margin grew by 3.2 percentage points to 8.9%. Excluding share of results of joint ventures and associates, net profit was 1.14 billion, and net margin increased by 3.7 percentage points to 8.9%. After full allocation of other income and corporate expenses, but excluding share of results of joint ventures and associates, net profit of cement products and concrete were about 27.9 Hong Kong dollars per ton and 17.6 Hong Kong dollars per cubic meter respectively. This slide shows some key indicators of our financial position in the first half of the year. As at the end of June 2013, total assets of the company were 51.8 billion. Net borrowings were 19.4 billion. Net gearing ratio was 86.5%, and net asset per share was Hong Kong dollars 3.44. These figures show the company remains financially healthy. For the first half of 2013, net cash generated from operating activities increased to 1.3 billion. Net cash used in investing activities was 1.5 billion. Net cash used in financing activities was about 1 billion, and cash at the end of the period was 2.4 billion. Now let's look at our production costs. In the first half of 2013, the average coal price we purchased was around 704 Hong Kong dollars per ton, representing a year-on-year decrease of 18.9%. Our standard coal consumption decreased to 107.9 kilograms. As a result of lower coal price and improved coal consumption, our average coal cost per ton of clinker produced decreased by 22.6% to 109.8 Hong Kong dollars. coal costs represented approximately 40.1% of the cost of sale of cement. In the first half of 2013, we managed to improve our electricity consumption to 79.8 kilowatt hours per ton of cement, representing a cost saving of approximately 149 million. Moreover, our residual heat recovery generators performed satisfactorily and generated 846 million kilowatt hours of electricity, representing a year-on-year increase of 22.3%. The electricity generated accounted for approximately 29.3% of our required electricity consumption, and we achieved a cost saving of approximately 540 million. Due to our reduced electricity consumption, our average electricity cost per ton of cement decreased by 7.4% to $41. Electricity cost as a percentage to the cost of sale of cement increased to 18.1%. Apart from coal and electricity, our raw material and other costs also reduced, which accounted for 21.1% and 20.7% of the cost of sale of cement products, respectively. In the first half of 2013, we have implemented effective cost control measures and enhanced operational efficiency. In terms of coal procurement management, we have adopted a short cycle and multi-channel sourcing strategy to lower coal procurement costs and improve cash flow with effective risk management. We have also reinforced centralized procurement at headquarters and strengthened regional sharing of raw materials and some spare parts of production facilities. In the first half of 2013, about 45%, 17%, and 36% of the coal we procure were sourced from northern China, neighbor areas of our plants, and Vietnam, respectively. The remaining 2% was from other countries. We have gained a more competitive advantage in terms of logistics and transportation through the water shipment and transshipment model. As at 30 June 2013, we have secured 540,000 tons of shipping capacity on the Xizang River, reaching an annual shipping capacity of 25 million tons. We also operated a total of 36 silo terminals along the Xizang River and its tributaries, with an annual capacity of 26.5 million tons. In addition, we have introduced GPS for scheduling truck transportation distribution in the Pearl River Delta region from July 2013. This slide shows the location of our production facilities. The upper green table lists out our control capacities by region. At the end of June 2013, our annual cement, clinker, and concrete production capacities were 73.9 million tons, 50.2 million tons, and 34.9 million cubic meters, respectively. The lower orange table shows the production capacities owned by the Guangzhou JV and Mengxi Cement, where we have equity interests. The total annual capacities held by the two companies were 25.2 million tons of cement, 14.5 million tons of clinker, and 500,000 cubic meters of concrete, of which 11.5 million tons of cement, 6.5 million tons of clinker, and 300,000 cubic meters of concrete capacities were attributable to us according to our equity interests. Now let me pass the floor back to our chairman, Mr. Zhao, for the outlook and prospect of the company.
Thank you, Robert. In July 2013, Central Economic Work Conference insists its keynote policy and steady growth, adjusting structure, and advancing reform. According to State Council Works Report on Urbanization Development, China's urbanization rate is expected to increase from 52.6% in 2012 to 70% in 2030. This will speed up development of public facilities, social housing, and infrastructure-related industry, leading to sustainable development of cement industry. the effective implementation of absolute capacity elimination policy and strict control of the approval of new capacity will control the net capacity addition and improve supply and demand dynamics, resulting in better business environment for the cement industry. We will continue to persist in our 3+2 development strategy. We will strengthen the industry consolidation in our regional market through M&A, while devoting for development of a circular economy and the waste treatment, as well as advancing national expansion and increasing our market share. According to our development plan, we will increase production volume and further enhance our market shares in operation regions by expanding production capacity and improving utilization rate. The company has entered into Guizhou since the beginning of the year. In operation with the coal and the thermal power business of China Resources Power on construction of the circular economy project in Bijie region under the Guizhou to Chongqing power supply project. According to the project, the company has commenced construction of 2 cement and clinker production plants in Jinsha County and Anshun City. We will continue to expand the scope of centralized procurement, improvement of logistic efficiency, foster the reform of our sales channel, and further promote lean management, as well as to take advantage of lowest total cost with the region. We believe China's economy will remain stable growth in the long run, and cement industry in China will keep advancing. We will spare no effort to becoming the world's first-class cement producer through technological innovation and improvement of our management. Thank you.